Hey, good morning, Marcy
Good
Berger.
morning.
Another closing, Chicago, Rehab, mixed-use property.
It was a historical property.
A historical property.
Mm-hmm.
The borrower is a professional real estate investor, but for a bunch of reasons, he could not go to a bank. We really focused on the property here. I think it was.
And also, I wanted to just point out that we do rehab loans every day of the week, but the rehab has to be in balance with the property. So if a property is worth whatever it's worth, and then there's rehab work of 50,000 or 100, it has to make sense. Because if someone comes to us like once, buys a property for 300,000 and wants to rehab it for another 500, that's not in balance. So it has to make sense.
Good example, perfect example. So, to redo Marcy's point, we like deals. We do rehabs. Marcy said them all the time.
All the time.
But to use an example on imbalance, and I'll give you a kind of real life example. If you bring us a deal that you're paying $100,000 for, and it needs $25,000 in rehab, that's fine. That works. It's
Right.
$125. But if you're buying a property for $25 that needs $100,000 in rehab, it doesn't work. It's too much rehab for us. And I'm going to be honest with you, or blunt, or direct. I don't know. But we're not the.
We're going to be blunt.
No, we're not the most competitive rehab lender. There's people who go lower rates and higher LTVs. We're not in that with the pack of competing with the standard rehab. But in this case,
low credit and needs to finish up a
and
property.
this was a lot of lenders, Marcy, don't do mixed use.
No.
This was a mixed use property.
Yes.
I believe it was one store downstairs, two stores
two
above.
two apartments.
So bottom line, rehab loan on a mixed use property, really collateral based, collateral driven. Guy couldn't go to a bank, but a good guy, professional guy. Oh, in Chicago, a lot of lenders are not doing Chicago. We love Chicago. We have a lot of deals in Chicago. It's funny, we're in Florida. People think all our deals are in Florida. The truth is, we have more deals in Chicago than in Florida. But anyway, what else?
That's it.
That's it.
Closed, and everyone's happy.
It closed. It closed, and the guy we dispersed his first draw. How it works is usually we'll disperse the money on draw schedules, protect the borrowers, protect us. Everyone's set.
And you work with me with the draws, so I, follow you through the whole process.
Yep. And how big of a loan was this, Mars?
His loan was 300,
something
and
like that.
It was basically to take out to finish the rehab on the property because there was a balance of 150 or so for rehab. So.
Another good point on this deal I just want to bring out, it just coming back to me, and I apologize to the audience. We just do a lot of deals. It's hard to, as I get older, it's hard to remember. Marcy remembers. She's sharp as a whip, but I'm not. This guy had put a good amount of his own money into the deal.
Yes.
He already owned it, and I think he spent about $100,000 of his own money or something like that to rehab it. So we felt comfortable with the deal. Chicago, rehab, mixed-use property, basically no doc. Check us out at geltfinancial.com. Call us at 561-221-0900. Marcy's 103. You're always going to speak to a decision maker. We'll let you know quickly. We're not selling our loans. Someone called up the other day and said,
they wanted to buy our loans. I'm like,
we don't sell our loans. We keep them on the portfolio. So we're direct lenders, portfolio lenders. You're always going to speak to a decision maker. You can speak to Marcy, Michael, me, Noah. Like the YouTube channel. I feel like we're repeating myself, so it's time to go. Have a wonderful day, everyone. Take care.
Bye.